welcome to this discussion on residency by investment in New Zealand. I'm delighted to be joined by an expert panel live from New Zealand, as well as Trevor Chanter here in London. We're looking forward to discussing over the course of the next hour the immigration considerations, tax, banking, family office, all sorts of considerations that your clients might be interested in considering a move to New Zealand. I think from our perspective in the UK, New Zealand has been handled this COVID crisis with extraordinary skill. The media reporting has been hugely positive, and as a result, clients are really actively looking at options to reside in the country. So we're going to unpack across the course of the hour all the different things they might think about. We're joined by some PCD members on Zoom, as well as an audience on YouTube. You can get your questions in live direct to our panelists, and I will bring them to the panel straight away as we walk through this discussion. So do put your questions either in the YouTube chat or on Zoom, and I will bring them to the correct panelist as we move through. So over the course of this next hour, we're going to get into all the specific areas that high net worth clients will be interested in considering. We're going to open up that discussion with Trevor Chanter, who's the Investor Relationship Manager at Immigration New Zealand in London. Welcome, Trevor.
Thank you, David.
So just to set the scene for this conversation, how have you seen COVID impacting demand for New Zealand residency options?
Well, thank you very much, and thank you for inviting me to talk this morning. So overall, the investor program has been hugely successful. It's very much a global investor attraction policy that we employ at INZ. Europe and the UK is a very important part of the world for us, as is the US, Canada, and also Asia. In terms of applications, overall, we've seen just over 2,500 applications since the program started, a little over 10 years ago. And of those, 425 are Investor Plus, so the higher investment level. And in terms of dollar value, that's just over $8.5 billion that's been attracted. To answer your question a bit more specifically, post-COVID, the application flow has certainly been very, very strong. In the last 9 months, just over $2 billion worth of applications have come in. And I think what's a little bit different to before, this split between Investor Plus and Investor 2 has been a little bit more balanced. So numbers fairly evenly split between the two categories. Whereas before, Investor 2 applications have certainly dominated. So application flow has certainly been very, very strong. The slight issue has been around obviously New Zealand lockdown in the early part of, or the middle part of last year, in common with many other parts of the world, which delayed, postponed any application processing taking part for the investor category. Since that time, latter part of last year, the teams were able to return to the office, so processing started again, but that coincided with a big influx of applications. So I think it's fair to say that application processing is not at the normal speedy standard. Applications have been, the processing team have been very much focusing initially on applicants who were onshore, because applicants who were offshore were not able to enter New Zealand in any case. That has now shifted to offshore applicants, particularly in the Investor Plus category as well. And the processing team has been boosted in terms of numbers. In fact, since the start of the year, has been effectively doubled in numbers. So processing is now very much underway, and they are now working through the backlog.
I think that's common with many jurisdictions. These unprecedented times have led to delays like that. But I mean, perhaps Trevor, you could set out the different entry routes? I mean, you mentioned there are a couple of them, but perhaps, for those less familiar, break down the different entry routes that a high net worth client might consider.
Sure, absolutely. Well, I mean, there are two investor categories, Investor Plus and Investor 2. Investor Plus is very much the more straightforward route. It has a minimum investment of $10 million, New Zealand dollars, obviously. And that needs to be invested in qualifying investments over a 3-year investment period. And the other main condition is that the investor also has to spend 88 days in New Zealand over those 3 years. So the time requirement it isn't particularly great. A couple of holidays is normally suffice, but the applicant has the right and the ability to spend the whole of the 3 years in New Zealand if they wish to. The 88 days is simply the minimum. Applications are treated with priority, as I said, and essentially there are rules and regulations around the application, but unlike with Investor 2, the restrictions are far less onerous. So with Investor 2, the investment amount is just $3 million, which is invested over 4 years. And the time period required in New Zealand for the investor is 438 days over the 4 years. So quite a lot more. It has a maximum age of application of 65. There's a minimum English language requirement level. And there's also business experience requirements, which it's a minimum of 3 years business experience to qualify. There are various mechanisms by which an application can also be treated with some degree of priority. And both for Investor Plus and Investor 2, philanthropic investments up to 15% of the application are permitted.
Okay, thanks. There's a question from a YouTube audience here just asking, reported today that over 400 investor category applicants may have to wait multiple years for applications to be processed. I mean, you touched on there, Trevor, some of the delays that are understandable. I mean, is that reflective? I mean, what's the kind of like lead in for someone who's interested in making an application and becoming resident in New Zealand?
I did see that article this morning, actually. I mean, and I think people are making assumptions and doing calculations without necessarily appreciating all of the aspects of that. I mean, the first thing I would say is clearly with the border effectively being closed at the moment, any application that is submitted effectively can't go to approval in any case, because approval would give the theoretical right to enter New Zealand, and with the border being closed, that can't be done. So, from that aspect, applications are being prioritised for people who are clearly onshore, and there are still applications coming in like that. I think multiple years is unlikely. We are seeing increased resourcing going into the processing team, and the ability of the team to process the applications as they come in is certainly increasing. If someone submitted an Investor Plus application, within the next few weeks, I certainly think, I would like to think that processing would start on that this year, possibly sooner than the end of the year. It's very difficult to put specific timescales on that. I do admit for Investor 2 applications who have to go through a 2-stage process of submitting an expression of interest initially, it may well not be this year before processing starts. But as I said, extra resources being put into the processing team, so hopefully that will not prove to be the case.
Okay, terrific. But in summary, I mean, the program is open. It's just that the amount of time that it might take, people need to be realistic. They need to get a good advisory team around them who can help them and set expectations. Is that fair?
Yes, I mean, absolutely. And I think what you've touched on there with the good advisory team is absolutely key. Many of the advisors have excellent access to the head of the processing team, so can have a good idea of what the timescales would be, and can pick up the phone with issues, etc., which is very, very helpful. And, I should also say that, I think the program is relatively straightforward. But people don't necessarily understand all the intricacies, the rules and the regulations particularly around areas like business experience, for instance, and having an experienced advisor who's been through that process multiple times with advisors before is certainly going to be extremely helpful and make the process as quick and as easy as possible.
Many thanks, Trevor. And on that note, I'd like to bring in Henry Brandts-Giesen who's the head of private wealth at Dentons, Kensington, Swan in Auckland. Welcome, Henry.
Thanks, David.
Great to have you on, sir. As Trevor was mentioning there, getting the advisory team right around the client is critical, particularly for complex, sophisticated, ultra high net worth client. How do you tend to assist the application process for those seeking to become resident in New Zealand?
Yeah, we're normally one of the first people that the applicants would reach out to. We quite often find ourselves being one of the first sort of people that the applicant would have been referred to, either by someone within our network or my personal network, or within the networks of the other advisors, such as those around me here today, that all sort of work in this space. And typically, I mean, each client is different, really. It's tried to say, but as we all know, with private clients, they come from different walks of life, different levels of wealth, and have different objectives. And so we don't really assume anything. We always have to meet up by Zoom. Typically, it used to be face to face or telephone, but now we nearly always meet by Zoom. And that's always a no obligations meeting, just to introduce ourselves, let the clients know what we do, how we do it, and find out a bit more about their circumstances and their level of knowledge of the system and what they want to achieve. And then we just give some general advice and some supplement some of their knowledge that they may already have. We've got a whole bunch of proprietary materials that we've prepared, which sort of workflow tools and checklists and a whole bunch of things that we're quite happy to share at an early stage, even sort of prior to the client making a commitment, because we just feel that the more helpful we can be at the outset, then the more likely they're to go through with the process, or potentially not go through the process because it's not right for them. But once we've had that first meeting, we typically prepare a scope of work and an estimate. And then once the engagement's confirmed, we prepare and send what's called a residency roadmap, which is really a compendium, I suppose, of all our experiences and guidance combined into a letter which is tailored to the client or the family, and which gives a lot of guidance around the immigration process, but also a whole bunch of other stuff relating to tax, purchasing property in New Zealand, doing business in New Zealand, estate planning in New Zealand, how to become a citizen of New Zealand, a whole bunch of other stuff that we find that we typically get asked at some stage along the process. And so we like to sort of preempt those discussions and provide as much information from the beginning. And then we also talk about a few traps, because as Trevor says, the system is relatively straightforward, or at least appears so, but there are certain things which we find commonly, or issues that commonly arise, and they can relate to things like source of funds, layering of assets, making sure that that we can explain and the client can explain to Immigration New Zealand how they made their wealth and why it's structured in the way it is, and then what portion of that wealth they intend to transfer to New Zealand and in what form. And so that often takes a little bit of advice and explanation that you wouldn't necessarily get from just reading the Immigration New Zealand website or sort of other generic materials. And then armed with that advice, we then work with the applicant or their personal assistants or family officers to gather the documents and information needed to populate what are prescribed immigration forms. But then what we do is, instead of just filing those forms in their raw format, we then prepare a detailed covering letter, which is intended to sort of bind together the various threads and build a narrative about why this particular client should be granted the visa. And we find that to be quite a compelling method of getting engagement, I suppose, from the case officers and really advocating for the client, and just put some colour on the raw data that's contained in the application form. And then we file the application. It's assigned to a case officer, and from there, there's often requests for further information or clarification, which is quite normal, and we just engage with Immigration New Zealand in relation to those requests. And then at some point, we will introduce other people within our network in New Zealand to the client to help them then think about the types of investment they want to make, and whether it be in sort of the traditional stocks, bonds, or alternative assets like private equity and real estate. And sometimes, because we're a large corporate law firm with a global network and an extensive local network, we can originate deals as well. So where clients are interested in corporate finance or private equity or direct investments, trade sales or whatever, we see a lot of deal flow, and we can occasionally originate deals. So we do have mandates from clients around the world to looking for particular types of assets. And so at any given time, we do have buy side and sell side mandates that we can present to clients. So once the approval is granted in principle, then there's this sort of due diligence period. There's 12 months to make the investments, and so we often go through a period of due diligence and advice to clients, and that can relate to tax, property, business laws. And then they make their investments, whether it be through a traditional investment manager or through some other asset class. And then there's really just a question of meeting the various conditions that attach to the visa, such as Trevor referred to, regarding days in country and keeping the investments fully invested for that period, and then reporting to Immigration New Zealand. So that's really, in our view, the start of the relationship. We then generally retain these clients as long-term clients, and they do some quite interesting things, whether in New Zealand or outside of New Zealand, for a long period of time. So it really is it's not really just an immigration process. In our view, it's a pure private client relationship.
Thanks for laying that out very clearly. We've got a question in the chat that's just appeared asking, what do investors typically want to invest in? And supplementary to that, what are the views of the conduits between UK and New Zealand in terms of facilitating investments? So, I mean, in the UK high net worth investor visa categories, the typical client would tend to invest in, UK gilts, for example. Are there any kind of trends in which people have a range of choices on investment, but do you observe anything? And we're obviously going to bring in Sam and Evan later on to talk specifically on investment, but what do you see as common themes in investment? Yeah, I probably would defer more to Sam and Evan on that, but I mean, I suppose it's very random, to be honest. It can be, some clients just want to buy government bonds, and then others, I've got mandates to go and buy tourism assets, and I've got clients that want to buy commercial buildings, and then your more balanced portfolios of listed stocks. So it's really quite random, if I'm honest. And so, but we do, and corporate finance type deals are also quite attractive at the moment. What I would say, probably, I've noticed in recent months there's been a greater desire for more active and direct investments than in the past. But that said, New Zealand is a minute economy, and so deal flow is not as available as what it is in other markets too. So that can be something for clients that have to get used to. Okay, well, we'll build on that with Sam and Evan shortly, but just staying with you, Henry, as well, on the UK New Zealand investment side, do you observe anything particular, or is there anything particular that UK clients coming over look for, or? Most of the UK clients I've advised have generally been quite
traditional in their investments, sort of bonds, listed equities. There are some, perhaps a UK specific trend is there's often a desire to use the SIP, self-invested pension plan, to transfer that's something that I've noticed for some UK clients. And then recently I've had quite a lot of interest from a few in relation to renewable energies. That seems to be energy sort of asset classes has been quite of interest to UK and European clients that I've spoken to recently, and forestry more so for European clients.
Interesting. And just from a tax perspective, do relocate? Is there any pre-arrival planning that relocators typically undertake when they're looking at the move?
Yeah, again, it depends entirely on the circumstances and wealth profile, but there's a 48-month tax exemption on your offshore sourced income, which is available to new migrants to New Zealand, and in certain circumstances that can be extended to 60 months with a bit of structuring. So we have helped clients do that a few times, but generally I'd say most of the tax planning is really done to help avoid double taxation rather than necessarily any great arbitrage opportunity. Although that said, sometimes when clients come from territorial tax systems, there may be some genuine tax planning opportunities, but most commonly when we work with clients from the US and Europe and UK, the focus is really more on ensuring tax compliance and avoiding the unintended and adverse consequences from the move. New Zealand's a signatory to FATCA and the CRS, and our revenue exchanges data with over 100 countries. So generally, that in all any accounts that are set up here will be reported to the home country, and so we work with the local lawyers, the lawyers in the client's home country and tax advisors to make sure that they're properly informed and prepared for compliance. Perhaps more commonly or more relevantly, we do quite a bit of structuring in relation to relationship property arrangements. So post-nuptial agreements, or prenuptial agreements, making sure that they're valid and effective in relation to the New Zealand situs assets. So we quite often, families we advise, I just did it recently there was a family of about 9 who moved here, and we did prenups we validated their post-nups for New Zealand for each of them. So that's a more common thing to do, making sure that, because our relationship property laws are a bit different to the UK and just or to the other European jurisdictions. So that's something that we've been doing quite a bit of recently. And in terms of structuring, I mean, what we do very commonly, and again, not really for tax reasons, but more for sort of expediency, is setting up holding companies in New Zealand, or otherwise procuring corporate and fiduciary services in New Zealand. And those entities are generally operated either as a satellite family office or just an investment vehicle for the New Zealand assets. So that's the more common sort of structuring that we and planning we tend to do. But that said, there can be some tax planning, particularly for those UK domicile clients that want to lose their domicile. We can start having that conversation pretty early on, because that can help avoid obviously inheritance tax, and then the same thing applies to some Japanese clients again. But that's so that's something that we would always work in collaboration with the UK lawyers or wherever the lawyers or wherever the client's based.
Sure. And then on the succession side, I mean, trusts, I imagine, part of the picture. Are there any other planning tools people use, life assurance, different things like that? What tends to be on the table when people are looking at succession?
Yeah, I mean, trusts are widely used in New Zealand for a number of reasons, one of which is succession planning. But frankly, a lot of the advice that's given to new migrants in relation to trusts is fatally flawed, I think, because it only comes from a New Zealand perspective. And so that's something to be aware of. I think because we're an international firm and most of us have worked most of our careers overseas, we sort of understand that, as you would, and that setting up trusts for a New Zealand trust for a UK domicile client can be quite catastrophic from an inheritance tax perspective. So we're always hopeful that that other people aren't setting up trusts for UK migrants, but we do see that from time to time, and that can be, as you know, quite catastrophic from the point of view of triggering that 20% entry charge. And so we So we don't typically set up trusts for UK migrants, and US clients don't usually need a trust because our probate process is far simpler and less taxing and expensive than what they usually used to. But they often have these living trusts or revocable grantor trusts and that sort of thing. So we work with them to make sure that they're compliant in New Zealand. And then I suppose from where clients come from a territorial system, then there can be some advantage in having a trust, or where there's perhaps a UK client which has an historic trust which contains excluded property for inheritance tax. We can work with that. That can be quite a useful device, particularly if it wasn't created by the person who's migrating. If it was created by a parent or a grandparent or something, that can be quite a useful device. And we do have a few clients that have those legacy structures, and they can be very useful. So it just depends. We certainly don't regard or default to using trusts as many New Zealand advisors may do. We take a pretty holistic approach to their affairs and to really try and understand their circumstances quite deeply before we sort of prescribe any solution. And all our clients are quite different. We advise the full spectrum really, from those that are sort of gathering together every dime in their or every penny in their SIP to make the investor 2 threshold, and then right through to the family offices, some of the wealthiest families in the world. And so each one will have a different level of sophistication and complexity. And for those really ultra high net worth clients, we do often set up a satellite family office here using a company or a limited partnership is the most common structure. But for those with less complex affairs, just a will, a life insurance product, I think is a good vehicle. We've done a little bit with private placement life insurance recently, quite interesting opportunities there. And relationship property agreements are sort of the things that we would work on with the less complicated clients.
Okay, terrific. Well, thank you for that, Henry. Keep your questions coming in. We've had a couple of good questions so far. Do put them in the chat, and I'll bring them live to panelists. Can bring back on Henry or Trevor if we need to. But I'm going to move on now to Bridget Remains, founder of Mobile Relocation in Auckland. Welcome, Bridget.
Thank you, David.
So just looking at more of the practical side of relocation, education isn't often a big driver. With parents with children of school age, getting them into the right school, getting them settled is key to a big move. How does the New Zealand education system look? How do you help clients navigate it?
Well, I'm really glad you started with that question, actually, David, because I wanted to talk a little bit about the pull factors for New Zealand. Immigration New Zealand did some research a few years ago that I'm sure Trevor's aware of, around investors who want to gain residence here or who have gained residence here. And it was interesting to see that the drivers for those people to come to New Zealand were not about business or financial motives, it was about lifestyle. And specifically, education was included on that list, but also the environment, friendliness of people, a whole range of factors. And I think that's only been exacerbated in my experience since COVID hit, particularly in relation to children. A lot of our clients from around the world have had their children out in and out of school over the past year. So they look to New Zealand, to the normalcy of life here, the fact that our kids are in school, much to the chagrin to some of my children. But anyway, that's from a parental point of view, that's fantastic. So those families who do work with us really have decided that they want to put the same resource, the same attention, the same expertise into making the most of the lifestyle in New Zealand as they do in getting their visa and the correct financial advice. So we work alongside the types of advisors and family office specialists who are on the call today and in the room with me to take care of that piece, which is the driving factor for many people to come to New Zealand. So coming back to the question of education specifically, I think the way we look at it is it's not so much about choosing a school, but really understanding what the family's big educational picture is for their children. They might have been on holiday in New Zealand and they loved a certain part of the country, but actually there are no decent schools in that part of the country. Are they planning to have their children spend part of the school year or part of their education in New Zealand and then return to their home country? Do they intend that their children will study at an international university or a New Zealand university? All these factors come into play. So for us, it's really important to start working with families at the point where they're starting to look at their visa applications and start their financial planning, because that's when we need to be starting work on understanding what that family wants, making sure that they understand our unique education system here in New Zealand, what the school options are. In the good times, we would have had a lot of families come and do pre-visits, look around schools. Now we do that by Zoom and take them out to visits when they do eventually get here and into the decision-making phase of deciding where their children are going to go to school. So I guess my main message really is that we're looking at an individual family's requirements for their children and creating a solution that meets that family's needs.
Okay, many thanks. And obviously linked to that as well is finding property where they want to reside. I mean, how can you help them like navigate the process of finding and buying that property?
Well, I think maybe Evan might have something to add on this, but the actual purchasing a property, getting finance and doing the transaction in New Zealand is actually relatively simple. So buying a property is not the issue, to my mind, for families who want to resettle here effectively. It's finding the home that they want. And that's where it gets a little bit complicated. You know, property prices in New Zealand are skyrocketing. We've had 22% growth in the median house price to the year to February, so in the last sort of 14 months or so. There is a housing shortage, so a lot of the best properties that the high net worth clients are after don't actually come onto the market. So you need local connections in order to access those properties. Construction methods here are different. You'll see a lot of wooden houses, which to a lot of people in North America and Europe is an anathema. Our construction methods are such that, you know, houses are quite cold. You know, we don't have the best insulation and heating standards here. And the real estate market itself is quite unusual. Most properties are sold at auction here. Unlike North America, the realtor really just lists their property and sells them. They're not looking after you in the way that a lot of Americans are used to. So I guess what we see our role as being as an independent intermediary in that process. Again, it's a process of understanding what the clients are after in terms of housing. And then we're not real estate agents. We don't take any commissions or have any commercial relationships with real estate agents. So we are there to be their eyes and ears on the ground and ensure that they get the property that they want to meet their lifestyle needs.
There's a question from the YouTube audience, and sort of I think building on your point, just saying historically New Zealand has been perceived as an illiquid market. But is this a concern for investors, or has the New Zealand's COVID performance basically reduced that? I mean, you mentioned about the property market being more buoyant. Do you think people's previous concerns about buying substantial property and that being illiquid is been reduced because the demand for property and land is on the up? What's your read on that to this for this question?
Well, I mean, I think the property market in New Zealand has been tracking upwards for a number of years. And in fact, we find generally the opposite, in that most people come to New Zealand expecting to pay less for a house than they actually do need to pay for a property. So entering the market is a better thing to do than waiting outside it. I mean, some of our clients do decide to rent, but for a lot of families, that's the second best solution because the rental market's not necessarily where the best properties are.
But the liquidity is there from it. It sounds like the liquidity is there for those who do invest and then ultimately may decide to sell, but there'll be new buyers there looking for those kind of high net worth properties. Yes, I don't know. Maybe Evan might comment on that later on, perhaps. Yeah. Okay, perfect. Well, thanks for that. And I think on that note, I will bring Evan in. So welcome, Evan Vezza, who is the head of the international sector for Bank of New Zealand in Auckland. Just on that, before we get into our discussion, Evan, just on that first point around the liquidity of the real estate market. I mean, what's your perspective on what that is like? What's the historic perspective been on it, and where you think we're at now?
Yeah, hi David. Yeah, thanks. Look, I think on the liquidity of the property market, it's constrained by supply simply. So I mean, we've had a lot of activity. we've seen that upward trend in property valuations for a number of years, but certainly over the last 12 to 24 months, we've seen that accelerate. And so we've seen an increase in activity in, the purchasing and sale of property right across this country, which was driven out of Auckland. But I think the constraint around supply is really the main issue here, and the fact that there's very little stock on the market that people can participate in to purchase. So I think that's a longer term issue as the government sort of grapples with how it frees up that end of the market. So yeah, there's liquidity, but there's some challenges with it.
Okay, and just more generally, you're focused within the bank on the Investor Visa program as a growth strategy. Just tell us a little bit more about how you participate and help advise clients.
Yeah, sure. So look, firstly, as a bank, we're very focused to the high value end of the immigration spectrum, and particularly where immigration solves some of the labour market gaps, but also supports the development of the capital markets. So we've always been focused to the value side, not the volume, and the country's seen volume for quite some time. But it really sort of dates back to when I first got involved, which was over 10 years ago, when I sat down with the investment director of the program at the time, who really saw it as an opportunity and a lever for economic growth, and sort of found that really interesting. And also the fact that they changed policy to make it more attractive to international investors. But they also brought it into the Investment Task Force, which is a multi-government agency strategy to attract international capital into New Zealand. And it formed one of 3 strategic themes for government. So the first being foreign direct investment. They were very focused on attracting multinationals to set up research and development. And the third is the Investor Visa program. So we thought that makes sense to us, and we should really look at the purpose of this. And very quickly we realised that we had an aligned sort of purpose around what the policy tries to achieve and what we're looking for as an organisation. So we really became invested in that program. We signed an MOU with Immigration New Zealand 4 or 5 years ago, and that was really to establish our intent to work with government in international markets to promote the policies and to secure investor migrants, for the benefit of the New Zealand economy here. So the other part to that is settlement. So we're also very keen to be invested in the settlement and integration of those investors as they land. So that sort of foundation arrangement we put in place with Immigration New Zealand has really kind of set us on the path for further investment into this area. Now, while it presented an immediate FUM opportunity, we could transact on that business in the New Zealand context. The dollars are 10 million New Zealand and 3 million New Zealand dollars is fairly significant in terms of what private wealth businesses deal with here. And while we could transact on it, we could really see the opportunity to play a connector role and sort of facilitate the connection of the international capital to New Zealand businesses for their growth. So either to grow exports or to help them scale internationally into markets that they're interested in. So it was all about sort of internationally connected capital, not just about residency for those coming in.
And from the previous question that I put to Henry about any trends that you see for how investors want to invest within the programs. I mean, Henry noted no real trends, client to client. I mean, how do you see that question? Do you observe any trends?
Yeah, well, I agree with Henry in that we've seen a transition or a change from passive investment, so investors investing in the debt market, so corporate and government bonds, where and especially when you consider the journey that they undertake, right? So over time, when they become more comfortable with the environment and get to understand the risk here or the risks, they tend to take on more risk in their portfolio. So they'll tend to weight more to New Zealand equities and perhaps property assets, as an example. So the composition of their portfolios for their visas do change, and we've seen that. But what's probably more important is the follow-on investment that we've seen through the program. So many of those investors have seen us as a a desirable location to commit follow-on capital beyond the 10 million or the 3 million. And we've really seen an increase in that private investment appetite for New Zealand businesses, particularly over the last sort of 3 years.
Okay, very interesting. And on the property side, you help clients finance property. I mean, do you find that the more sophisticated clients, buy land and substantially renovate properties, or is there a stock of properties that they kind of buy off the shelf and renovate inside? Is there anything that you see in that top end of the market in terms of supply of properties or development work that goes on?
Well, there's certainly an interest in commercial property assets here. So we have seen that interest, and we've facilitated some of that interest into that sector of the economy. Yes, there is also some property development appetite there as well, and is allowed within the acceptable investment criteria of the investment visa policy. I mean, we've seen a mix of things, right? We've seen people purchase land down in Queenstown, for example, which is highly desirable, down at the bottom of the South Island, and build homes. But we've also seen, the purchase of substantial existing property here that they've moved into and renovated or changed in different ways to their liking. So, I mean, we've seen a real mix, but I think the commercial property aspect to that stands out.
Okay, thanks. I mean, Henry, just to bring you back in, I mean, are there restrictions in people if they're buying land and developing a residential property, or indeed investing in commercial property? Do you come in on the legal side of that to try and help them navigate local planning and all of that?
Yeah. So we will, my firm will help with the acquisition of those sorts of assets, whether it be commercial or residential or lifestyle. Now, there are restrictions on the acquisition of residential property in New Zealand. So that's typically something that does require some advice and some education for clients, because many of them will assume that once they're accepted for their visa, they can go and buy a nice property by the lake in Queenstown or on Waiheke Island or something like that. And unfortunately, that doesn't quite work like that. And so we have to manage expectations around that. People and actually, it's a bit too complicated for me to sort of go through the whole process in the time we've got available. But that is usually something that we give advice on pretty early on, because we don't want people to assume that they can just go and buy whatever they want once they're accepted. But that said, there are some interesting developments which are available for investment, which are structured in a corporate way, right? So the land is you effectively buy lifestyle land through a corporate vehicle, and there's some really desirable developments, about 3 that I'm putting clients into, or have clients that are invested into, which are structured as a corporate, and which can don't give you the security, I suppose, of a freehold piece of land, but they can certainly give the lifestyle benefits of a property through a corporate structure. So there are some interesting opportunities there, although not many. They're quite limited.
Okay, thanks. And Bridget, I mean, what do you see on the ground there in terms of people buying land, developing stuff, buying stuff that's just kind of off the shelf, as it were, in the luxury end of the market?
Yeah, well, I think there's a distinction to be made here between property for investment purposes and property for that home factor, where your kids are going to live, where they're going to be close to school, where you can go to the beach or whatever you want to do. And, that's what our clients place priority on. And the challenge sometimes is finding those properties for them that meet their family needs. I think one of the other aspects of New Zealand that is sometimes unexpected for people is they, looking from offshore, particularly at the moment, see a country where, life is pretty good. In the background, I have Waiheke Island. There's a nice vineyard there. There's lots of lovely properties, but they're not all for sale right now. So there's an advantage to being small and distant, but there are supply issues around housing, as Evan mentioned. There's lots of other issues to do with things that are quite unique about New Zealand, from our accent to our property market. So navigating those differences, which on the surface don't seem to exist, perhaps as a visitor or an outside, or a person looking from outside, can be quite a challenge. And I often recall, one of our clients from the US actually, who we'd found a fantastic property for, was very happy with, and we were reflecting on it afterwards, and he said to me, Bridget, on the surface, everything looks really the same, but the infrastructure underneath is completely different. And I think that summed it up really well.
Brilliant. Well, thank you for that. Evan, just to come back to you to finish up on the investment piece. So you work closely with JBWere Wealth Management. Perhaps you could explain a little bit about how you work together around the investment offering.
How it'll work, sure. Look, I have a team here based in Auckland at the BNZ, which provides support to new migrants to this country and their families by way of establishing their banking pre-arrival to New Zealand. And we still continue to do that even though we have closed borders. And we do that so that we can receive that capital ahead of their intended arrival here. And we work with our strategic partner, JBWere Wealth Management, to deliver the investment services to support that. And the background to that is we both share the same parent company, which is the National Australia Bank. So National Australia Bank bought 80% of the Goldman Sachs stake of JBWere back in 2009. And because we share the same parent company, it just enables us to collaborate and to join up some of our processes, especially around KYC, which is incredibly painful and onerous for people when they're trying to establish banking in a new country. So I have a team that supports that. The JBWere offering is simply about constructing investment portfolios of compliant assets to meet the Veza. And what supports that is the reporting, the consolidated reporting that is delivered at those critical moments throughout that 3 or 4 year investment period to ensure compliance with Immigration New Zealand. And then as a major wealth manager here in New Zealand, we have the privilege of reaching into all, sectors of the economy and look to bring different opportunities to investors outside perhaps the investment portfolio for the Veza. And so that's the relationship, and we work very closely, and we've been able to invest many clients from low to medium risk countries while we have been closed. So we've been able to establish some pretty good workarounds during that period.
Okay, excellent. A good point to bring in Sam Bejjani from JBWere, his family office advisor. Welcome, Sam.
Thank you, David. Hi, everyone.
So for that ultra high net worth client relocating, establishing family offices, what kind of investment community and ecosystem would they find in New Zealand? How would you characterize it?
Sure. I guess the obvious piece is that, there's a number of wealth management firms like JBWere that allow access into the listed market. And while the New Zealand market is relatively small, and I'll touch more on that soon, because our market is small, we have really good knowledge about the Australian market. So very often they come to us to invest in the New Zealand assets, but over time that relationship develops and we essentially also become their advisors into the Australian equity market. Beyond the listed market, when you're talking about the private market, there's really quite a wide range of opportunities. Historically, New Zealand has always had a well-established private equity sector. And over the years, the angel community has grown and is really thriving at the moment. Where over the years we've struggled was in the venture capital space, that bit in the middle, where for a number of reasons that maybe we don't have time to cover today, there's been a bit of a gap there. And so really over the years, or recent probably years, I'd say over the last 10 years, and I would say the Investor One program has actually made quite a big difference. We've seen the venture capital space develop and become a lot more sophisticated. And that's been partly because New Zealand has had some technology companies that have become very successful. And that put us on the radar of investors around the world. But equally with local and global family office capital, looking more at the New Zealand venture capital market, that combination of success with startups, but also sophisticated wholesale capital, we're now seeing the VC space develop and get some really good momentum as well. What's been interesting though with the Investor One clients we have largely across the US and Europe is that out of the US, often their source of wealth is technology driven. So they come to us and their brief to us is to really help open doors for them to invest in New Zealand technology. And that could be really early stage or maybe more expansion phase. But then a lot of our family office clients out of Europe have typically a source of wealth that's in a well-established business that's been around for generations. And often, and I'm generalizing a little bit, but there's a reason for that. Often their interest in their brief to us is to invest in what I call more legacy assets, meaning land-based agriculture, forestry. And so it's been really interesting having a relationship with clients from both across Europe and the US, but also parts of Asia, and seeing how their interests are actually quite different.
Okay, great. And the type of investment opportunity, it sounds like, it's everything from the technology side, very IP driven, as it were, all the way through to land, and as you say, the very tangible assets from real estate land. I mean, what kind of investment opportunity might you bring, if there is anything? If you give us a flavour of the sort of deals that people might be looking at.
Yeah, absolutely. I mean, New Zealand's a small place, and we are pretty well connected, and so for JBWere, having a really close relationship with the Bank of New Zealand, that opens up a really important network around uncovering opportunities, but also with other professionals like those in the room. And because the market is really quite small, we can access a wide range of opportunities. Now, to give you an idea of that, there's been two well-established VC professionals, one out of Australia, one out of the US, who've come to New Zealand, set up a fund with a view of investing into the early stage startup ecosystem. And they've attracted a lot of family office capital. We've encouraged a lot of our clients to look at these opportunities. At the other end of that spectrum, our firm has recently approved a fund that is really raising capital to invest specifically in the kiwi fruit opportunity, and more specifically Sungold, which is the yellow variety of kiwi fruit, because New Zealand has essentially a patent on that variety until 2039. And then in the middle of that spectrum, at the moment, we're in discussions with a group who are essentially doing the feasibility study for a super data center at the bottom of New Zealand that will be powered with 100% renewable energy. And so that gives you three different opportunities that I would say are very different. And it just highlights the sort of the spectrum of things that we see. And ultimately, it really comes down to having a conversation with each client, understanding their interests and drivers, and really getting a brief from them that allow us to be their ears and eyes on the ground in New Zealand and open doors for them.
Okay, thanks. And on investment market dynamics, I mean, how does New Zealand differ to international, other international centres? What's the main points of difference that you think people maybe underestimate or need to be aware of?
I guess if we're comparing New Zealand to the major markets around the world, UK, Europe, US, what I think is unique about the New Zealand market is that it is a small market. So to give you an idea, our GDP is about 322 billion. Our entire stock market is, there's about 186 listed companies with a total market capitalization of, give or take, 190 billion. However, within that market, our main index is the NZX 50. So 50 companies as opposed to 500 on the S&P 500. But within those 50 companies on what is really our main index, beyond the top 15 to 20 names on that list, liquidity drops considerably. I know there's been some questions about liquidity. And so, very often when we're constructing a portfolio, while we may have 186 companies, which in itself isn't really that much, but if we have some important liquidity requirements, it really sort of limits our options quite a lot. So it's small. It's also, I think, it sort of skews to being quite defensive. Because we have a small economy, inevitably the big corporates may develop a monopolistic or duopolistic position. And so they end up being quite defensive companies. The positive in that is that they will typically pay quite a good dividend yield. So the average dividend yield for the market, the net yield, is about 3.2, 3.3%. That's a cash yield. on an average PE ratio of about 22.8 at the moment. So in that regard, it's quite good, but it is defensive. There's a lot of utilities, a lot of infrastructure companies, telecommunication companies, and so on. And also what you'll find, because it's quite attractive to global investors for its dividend, what's important to note is what's happening at the moment in the world with the reflation trade, and those concerns that you're going to have higher interest rates and higher inflation. Our market tends to be quite sensitive to that. So while stock markets around the world have done pretty well from the start of January, our market is down about 1.7% because over the years, we've attracted a lot of bond capital from around the world into our more defensive dividend stocks. So that's just capital chasing yield. But as you start to see interest rates, bond yields go up, you will to some extent see a reversal of that trend and some selling of those dividend stocks, where that capital basically flows back into the bond market potentially. So our economy is very strong. We have a lot of very high quality companies, but in the short term, keeping in mind what I've just said about the nature of our market, the way it responds to yields rising a little bit might be quite different to the way the UK market responds to it, for example.
Okay, thank you. I think a good point to bring in Michael Okane from the New Zealand Bullion Depository. Welcome, Michael.
Thanks, David. How are you?
Very well, thank you. So just picking up there on some of the investment trends that we heard in the family office space that was very interestingly laid out by Sam. You operate the local gold bullion depository business. How have you seen trends in recent years in demand for gold bullion in New Zealand?
Well, post GFC, it's been an interesting environment where the gold price dropped after the GFC, obviously, but our clients have seen it more as an opportunity to buy and bring in more gold. We track closely to the investment program that a lot of our clients are investing in migrants. And so the demand to bring gold down to New Zealand's grown with that. But the increase in physical demand has grown astronomically in the last couple of years, obviously, with the COVID pandemic and the other issues, the geopolitical issues, the domestic issues in the US, Brexit, for example. It's been a growing area.
So the economic backdrop is set for people to look at their overall asset allocation and just to think about having an allocation to defensive assets like gold. Are you seeing the economic conditions being right for investors looking at physical gold?
Yeah, most of our clients see it as an insurance policy. So they're taking a position of physical gold to protect their portfolio. And the reason they're taking a physical allocation and then moving it to New Zealand is to take it as a hedge and look at it as a safe haven in a safe haven location.
Okay, and I mean, where do you see demand coming from for clients? I know you deal with clients across the world, but what kind of trends have you picked out for people who are looking to store gold, not only as a resident, but as a non-resident? Is there any themes you pick out there?
We're getting a lot of traction out of Germany at the moment. So our European target audience is growing pretty quickly. That's been the last 4 to 5 years at least. Definitely out of the US, there's been a lot of drivers there, obviously. And the Swiss and that region is actually looking to more move gold out of the existing safe havens, if you want, and out into outlier regions.
Okay, and I mean, how does it compare with other centres like Hong Kong or Singapore, or as you say, Switzerland? You know, if you've got that very sophisticated, ultra high net worth client, are they looking at a strategy where they have true diversification across geographies and have holdings in different locations to spread their risk?
There is an element of that. The concern for a lot of them at the moment is with the issues in Hong Kong, obviously, with the Chinese government moving there, has made it not quite as desirable as it was once upon a time. Singapore also has issues with China. Of course, it's at the base of the South China Sea. And with China's current expansion into that area, it's just created a little bit of concern around the long-term security in those regions. Places like New Zealand and to some extent Australia provide just that next step, that next layer of security that we're not seeing in the old areas that you once did.
Okay, very interesting. And does the opportunity for relocators to store gold locally provide them some comfort? The fact that the physical proximity is there. I mean, how do you see it in a relocation story?
As a relocation thing, yeah, all of our clients that are migrant investors have looked at us to bring their metal down with them. It's an ancillary service to the investor migrant program, so it's not part of the payment that's made for that program. But what we find is that quite often it's more of a security blanket, and so we end up being a little bit more under the radar for the clients, and they want to hold what we do for them a little bit more close to their chests. So the ability to provide a layer of security and the discretion that we can provide is of benefit to them.
Okay, terrific. And we're coming towards the end of this session, but we've got a question from YouTube again, just asking. It's an open-ended question for any of the panel, just asking that New Zealand's illiquidity is also its strength. So in a sense, is the fact that things are a bit difficult, your visa application might take a little bit longer, you need certain things in place. That's how the country has been successful in managing this crisis. I mean, Henry, do you have any thoughts on that statement? It might be a bit controversial. Perhaps you'd say, oh, well, actually, we're not seeing that liquidity.
It's an interesting point. I'm not so sure the liquidity bit's the relevant part to that question, but it may be to do with perhaps the integrity of the system. And actually, it was something that comes up quite often in conversation. But only a day or two ago, I was on a Zoom call with someone in the US, and he was sort of just making inquiries about ways in which he might be able to get further up the queue, which Trevor spoke of. And I said to him, look, I get asked this question a lot, but really, and I don't like not being able to provide sort of solutions, but there's not really an obvious one to that conundrum. That you just sort of got to get into the queue no matter who you are. And he actually quite, I think, appreciated that because it is a high integrity system. So that can be, whilst an inconvenience to some who may be hopeful of a sort of a red carpet treatment, which they may get in another jurisdiction because of who they are or what they have. That whilst that's as a general rule in New Zealand, I think it is a very high integrity system, and it's fairly much one rule for all, and that may be for some clients that's actually an attraction for the jurisdiction.
Okay, thank you. I mean, Trevor, just to bring you in, I mean, as Henry mentioned there, the fact it's a high integrity system makes some hurdles, but actually carries a lot of benefits to it for the right kind of client. What's your view on that, and how you describe the system to people looking at it for the first time?
Yeah, well, I mean, absolutely, it does, and I think New Zealand has made it pretty clear that the system is a high integrity system, and I think that attracts the sort of people that New Zealand is keen to attract. It works both ways. I mean, I've been in this role helping investors for 5.5 years now, and there've been a couple of occasions when processing times have been a bit longer than people would hope for. But that's mostly because the demand there is quite strong. People do really love New Zealand. Those who have visited it, those who have researched it, it is quite often a lifestyle thing, and people do have to be a little bit patient to really get what they want.
Okay, great. Well, good things come to those who wait. And we are out of time today on the panel. So thank you so much for that very interesting discussion, which we look forward to sharing with our members and audience. Thank you very much to all of the panel for your contributions. Thank you for the interesting questions that were offered up throughout the hour. And I suggest anyone follow up with any of the panelists. Happy to facilitate introductions to people. And I wish you a good day.